Good afternoon, everyone. Thank you for joining us today. Welcome. My name is Taya Brown, and I am the Administrative Coordinator here at the Temple SBDC. The Temple SBDC helps small businesses start, grow, and succeed. We do this through our no-cost consulting and a variety of our no-cost webinars and training programs like you're attending today. You're joining us for Intro to Business Lending. We are recording today's session, and a copy of the recording as well as the slide deck will be sent to all attendees within 2 to 3 business days in a follow-up email. We do encourage you to post any questions that you may have in the Q&A box or chat. And now I will turn over the floor to Steve Sauer.
Awesome, thank you. Good morning, everyone. So I'm Steve Solomon. I'm here with M&T Bank. I'm a business banking relationship manager, and I'm also joined by my colleague Jen O'Hara, who's a branch manager partner that I work directly with. I'll give a quick background on myself, and then Jen will have you do the same, and then jump into our content. So I've been with the bank for 9 years. I started in our retail branch network, similarly to Jen, and about 5 years ago switched to our business banking group. I myself am a Temple grad, go Owls, and I've been working with small business owners now in a variety of capacities for pretty much the entirety of my time at the bank. So it's something that I really enjoy. I work directly with folks in Philadelphia proper, but also in the surrounding suburbs in PA and Southern New Jersey. Jen, I'll have you give a little bit of your background as well.
Hi, everyone. My name is Jen O'Hara. I am the branch manager here at Rittenhouse Square in Center City. I have been with the bank for a year now, but I have been in banking for over 12 years, worked just about every job in retail, and currently I work hand in hand with Steve. I work on the small business accounts, but also work with him with the loans as well. I will be here to help out with the chat. So if you have any questions, throw them out. Some of them we might save for the end, some we may be able to answer during the presentation, but please utilize the chat and I'll be responding to you there.
Cool. Thanks, Jen. And I'll be periodically looking over to the left to make sure that I'm navigating this presentation okay. But the content of what we're here to cover is all things small business lending. So what business owners should know, whether you are pre-revenue in terms of like looking to start a business, or you're in the growth phase, or you are an established business and may be looking to procure capital at some point. So we'll talk through all different capacities of that. And here's a little bit more specifically of the agenda of what we'll cover. So what small business loans are and how they work. So what like the different processing entails in terms of procuring them, going about the application to actually getting funding. There are different types of loans. So what each of those is used for and what benefits there are to each different like loan or product type. And then, the process of actually how to go about submitting an application, best practices of what to look to include or prepare so that you put yourself in the position to obtain the funding that you desire, or have a successful process from start to finish. And then we'll recap and we can open it up for greater dialogue or further questions then. So as far as what are small business loans and how do they work? So just kind of as it sounds, right? Any borrowing that a business may take for any specific purpose, right? There's general business funding, which we would consider working capital, just cash or day-to-day needs that can be met by having, funds available through a bank loan or a bank line of credit. And then there's special purpose loans, for specific uses, whether it be equipment, real estate, variety of different loans can achieve specific, funding needs that are kind of directly correlated to the product type. And there's obviously all different types of businesses that work with us, right? I mean, this picture down below spotlights kind of some different industries that we work with. I first looked at this and I thought it was a zookeeper on the right, but it looks like some sort of distribution facility, but he has a pet. And medical dental is a common industry that Jen and I work closely with. hospitality, as it shows here, that's an example of a client in Buffalo, New York, which is actually where the bank is headquartered. I'll give a quick overview of M&T too. I probably should have done that earlier on. M&T is a large regional bank, so we're headquartered in Buffalo. We have branches that span from Maine to Virginia, and everywhere in between in the Northeast United States. Top 20 national bank, and been around since the mid 1800s. Jen and I obviously work in Philadelphia, and we have some branches here in the city, and as well in the suburbs in South Jersey. So what specifically when you think of a small business loan, the bank and defines it, right, as something that can help the economic growth of a business. So when we're looking at the financing, it's how can the money that we're lending directly impact the business, whether it be increasing employee count, enabling additional equipment to help produce another good or service, something like that. So those are kind of some of the metrics we look at when we try to measure the impact of what a loan could offer. So here's a breakdown of a few different types of loans. So we kind of break these out into a few different buckets. There's term loans, or what we call term financing. So term loans typically are repaid over a set payment schedule, whether it be 5 years or 7 years or 10 years. And they have a set payment with principal and interest. There's sometimes there could be an interest-only period up front where there's a smaller payment and then it converts into a principal and interest payment. But typically this is more set and fixed rate financing. Sometimes there is a variable rate component depending on if you're looking at a loan guaranteed by the SBA. But typically this is for permanent working capital money that is going to be injected into the business, and anything that would take more than 6 months to a year to see repayment on. The business line of credit is a revolving facility that's more for short-term working capital. So if there's, if your business has a period of time where maybe you collect payment from clients in 30 or 60 days, but you need to make your bill payment sooner, the line of credit can help supplement that and even out cash flow in a month. And this is what we typically advise is good for someone to have if they're running into that or they need help support payroll, and anything that's short-term financing under a few months, where we can expect repayment. And then there's equipment loans, so fixed loans that are obviously directly correlated to buying a piece of equipment. So if you're buying a truck or you're buying a specialty equipment item that is needed for your business to function, this is what is directly financed and used as collateral for the loan or for the lending. I alluded to it before about SBA as an option, and what is that? So we have at the bank and within our business banking group, we offer conventional financing options, which is where the bank kind of just makes the loans direct to clients. And then there's also SBA, so loans that are backed by the Small Business Administration, which is an arm of our U.S. government, and funded and supported by taxpayer dollars. So these offer guarantees for loans that traditionally banks may not necessarily feel comfortable doing without it. So that could be because of a myriad of reasons. Maybe if it's a newer business or a startup or a business that doesn't have a lot of historical track record to show adequate repayment. Or it could be an example where there's a lack of collateral that the bank does not feel comfortable making a loan because there's not that equipment or real estate that's backing it up. But the government will then offer the SBA guarantee, which may have a 75% or 80% or 50% guarantee, in which, if the loan was to be in default and for whatever reason could not be repaid, the government then can come in and support and provide a guarantee of at least, a certain percentage of the debt that the bank had issued. So banks can work within the SBA government programs, and M&T happens to be a preferred lender. There's different banks that have different statuses. The 7A program is an example where M&T is a preferred lender and knows the process and can more or less do the rubber stamp to get the guarantee in place internally. So the process is you get approved for an SBA loan, you work with the bank on doing the SBA process to get the guarantee in place, and then they can move forward with the actual bank loan closing documents. So what should you do before you apply for a small business loan? There's kind of a handful of things that, Jen and I could touch on or recommend, but, you may have an idea that, all right, I want to, buy this truck or look to purchase this real estate. And there's a good, that's obviously great. And it's great that you can be able to reach out and connect with a bank, but what can you do to make sure that you're in the best position to get that approval that you're seeking? A couple different things that we talk about are, and obviously you can work directly with the SBDC on, is, having your financial documents and potentially a business plan prepared and ready to go before you schedule a meeting. So typically a bank will want to look at a combination of business and personal financial documents. So particularly for the business, that could include, 3 years of business tax returns, any business year-to-date financials, which would be, say we're looking at a loan request today. Jen and I may look for a 2024 profit and loss statement from, say, January to July or January through June. And similarly, a balance sheet to see what the current asset and debt position is of the company. You also would want to maybe include an AR and AP aging report, so showing what your accounts receivable and accounts payable items look like and how long they've been outstanding. And if you're in a specialty contracting role or working on jobs like that, there's work in process reports or pipeline reports that are also helpful. On the personal side, we typically look to get 3 years of personal tax returns from any business owner that is over 20% owner in the entity. That is not a hard and fast rule, but it's a general best practice that if somebody owns more than 20%, that they would be responsible for a personal guarantee of any business debt. So we would also look to collect a personal financial statement, which the bank would have a template for, or you could find one online, which outlines your personal bank accounts, any stocks or bonds, any notable assets that may be owned, and then any debts, right? If you have a mortgage, if you have car loans, student loans, credit cards, etc. And then other items that may be required, if you're in an early stage or startup phase, there's an expectation for the business owner to have a business plan outlined, which is a document that kind of holistically outlines what's the business going to do and how's it going to make money. So what's the opportunity that you see in the marketplace that you could open your business to drive revenue and show that the business is functional and can be sustainable. And then that is more of I'll call it qualitative document, where you outline all those things in, outline format, where you describe, what each component of the business is. And then in the quantitative form would be projections. So typically the bank wants to see 3 years of profit and loss projections to show how the business is going to operate year 1, year 2, and year 3. And, again, business plan projections is something the SBDC can help with, but there's plenty of resources. And obviously Jen and I at the bank are happy to review items also to see, based on our experience or some of the industry knowledge that we might be able to obtain through the bank, does your projection document look in line with what we would expect to see from other industry competitors? Or does your business plan include all the details that we would want to articulate when submitting a credit request? And on the personal side, it's worth mentioning, mentions about having good credit. So what does that mean? Especially in businesses that are in earlier stages, we rely heavily on personal credit from the borrowers. So if there's an owner who is 100% owner of an LLC, for example, we would want to see what their personal credit score is. Typically, we like to see, 680 and above from a FICO score perspective. However, I say there's more details than what is the score than just what meets the number. You could be at a 650, and if it's a medical collection you were unaware of that is bringing your score down, you can have a conversation with the bank about that, get that resolved, and you may see the score rebound in short order. And then vice versa, if somebody has a 725 FICO score, which would be seen as permissible to move forward, but there's slates or other things that may be of concern, the bank may take a little closer at that. So, obviously the stronger the personal FICO score, the better, because it's indicative that the individual has been responsible with all of their personal debts, and it's a solid predictor that they may also be responsible with their business debts. So I touched on this a little bit, but here's some other documentation that might be valid or required for looking at a loan request. So, cover the business plan, tax returns for the business and for the personal guarantors. A resume also can be helpful, especially if you're entering a new business into a new business setup and you have industry experience in that respective field. I gave the example of what Jen and I mentioned that Jen and I work on closely with some of our medical and dental clients. So if we are working with a dentist who is looking to open a practice or buy a practice from somebody else, then we have them provide a resume so we can see what their credentials are, how long they've been working in the industry, where they went to school, those types of things. Similarly, if someone was looking to open up their own manufacturing business, I know one of my clients that I worked on last year was a startup label manufacturer. So he had 20 plus years of industry experience in label print sales and working with clients, and decided he wanted to open up his own business. So, the resume was helpful to show that he had the industry experience and knowledge of the label business so that he can, immediately drive revenue and be able to convert some of his old clients into customers with his new business. So that's certainly helpful for us to see, because it gives that gives that holistic background of what the career path has looked like for the individual or individuals. And then personal background. I mean, some of those items are outlined in the application or in the personal financial statement, but some of the qualifying questions of name, address, phone number, citizenship, and then questions related to are you party to any legal action? Have there been any recent criminal offenses? Those types of things, many of which are kind of standard operating procedure and certainly a requirement in looking at getting SBA financing to be eligible for government-backed lending. Other documentation that may come up too are bank statements. So, if there's typically with a bank, especially like M&T, when we are looking at doing business financing, we typically also are the primary business bank for a client. And Jen, I'll probably have you chime in here as well. When we collect the business bank statements, that gives us an idea of what activity the business may have in place. So Jen, if you could, chime in, if you, and just share what, when you typically look at business bank statements, what are we looking for? What kind of things jump out at us that we help and comment on also from the banking side of things?
Absolutely. So when we're looking at your bank statements, we really want to look and see, do you maintain regular balances? Are you paying bills regularly? Do you overdraft your account? Do you not overdraft your account? Those are some really basic things that we're looking at. But with that as well, we may look at your bank statements and see if you have merchant services, and maybe if you want to talk to our merchant services person, or if you want to move your accounts over to us, what services do you currently have that we also offer? So we're going to look at it as more of a holistic approach as well. We want to look and see if there's more that we can do to help you besides just lending. But as far as the lending goes, we want to make sure that you're able to maintain and pay regularly everything that you need to do without constantly overdrawing your account, with maintaining decent balances. And that's when it is helpful to also have your relationship with the bank like Steve said, we like to work with customers that also want to bank with us. And that's so that we can see and make sure that, you are paying what you need to without overdrawing, as I said. But we love to have that full relationship here. And sometimes when it's a little dicey, maybe personal financial statements aren't quite there, or maybe we're not quite sure where the decision may go. Sometimes the bank statements and having the relationship with M&T can help, because we can look at the balances and see, okay, you do maintain regular balances. You've never overdrawn the account. You've had a stable relationship with us for a while. So there are cases where that can also help tilt the balances in your favor.
Awesome. Thanks, Jen. And as you were providing that clarity on the bank statements, a couple questions had rolled in that I can address both now, because they correlate to the documentation for the loan. So yeah, beyond the bank statements too, obviously one of the other components is looking at identification documents for a business and individual. And so someone had asked about, do you need to have an LLC set up in order to obtain a business loan, and how long do you have to have the LLC for? To answer your question, our business borrowers come in a variety of forms, so it doesn't necessarily have to be an LLC. You could be an LLC, you could be an S corp, a C corp, a partnership, or a sole proprietor, or a sole proprietor doing business as. There's kind of a variety of options, and I always tell folks that I'm not an attorney and I'm not a CPA, so I can't necessarily give legal or tax advice. However, setting up your entity in maybe an LLC could be advantageous from both a legal and tax perspective. So, the SBDC likely has some relationships or some folks that can be able to guide or direct you in what decision makes sense. I can tell you just anecdotally, a lot of our clients are set up as LLCs, but it's not necessarily the only way to do it or end all be all. As far as other documentation that's needed, there's an item that outlines collateral, right? And that depends on what type of lending you're looking at. So if you're looking at traditional just working capital financing for maybe a line of credit, or just to get some additional cash in to help support payroll or startup expenses, it is nice for the bank to see what collateral is available. So what the business owns, and what the maybe also what the personal guarantor has on their personal financial statement. If you're doing real estate or any real estate related financing, we would be typically procuring an appraisal or a value to see if we're doing, for example, a mortgage or a refinance, to understand what the value of the property is that we'd be taking as collateral. If we're, in some examples and with larger SBA loans, if there is a collateral shortfall, so hypothetically you're buying a business for $500,000 and the business has $100,000 in collateral, the bank may look to have additional collateral available, which may come in the form of a second lien on a personal residence. So in that case, we may or may not need to get an appraisal depending on what the value is. So depending on the nature of the request and what the collateral is, might dictate what the needs are. But specifically for real estate, oftentimes we will look to try and obtain an appraisal to get a sense of the value and confirm that. The debt schedule is also one thing that I didn't mention that I think is important to highlight. What that is if we're looking to work with a business for financing and they already have additional or existing business loans, the debt schedule tells the bank, hey, I have these 5 loans, and here are with what each bank it's with, the original amount that was borrowed, current balance, my payment amount, and the interest rate. And then it might say what the purpose of the loan is and what the collateral is. Excuse me. And it's important for the bank to see that, because when we look at our cash flow analysis to see if the business has the ability to repay the loan, we also have to layer in any other debts that are outstanding. And we also might be able to make comments of, hey, I see you have a $50,000 loan with XYZ Bank, and it's at 11%. If you were to look to refinance that, you might be able to get a few percentage points off if you were to refinance that. That's something we can maybe provide feedback on, or vice versa. I mean, Jen and I will look at debt schedules for some of our clients now that might have gotten some loans back in 2020 or 2021 for certain things that are at very low rates. And so it would be advantageous for them to try and keep those loans in place. So it's just helpful for us to get a sense of what debts are outstanding, how many more years are left on the payments, and how we layer that in when we look at an overall cash flow analysis. All right. I touched on this a little bit, but from a legal document perspective, this kind of covers some of the things that we would maybe want to take a look at. Specifically from the business side, a certificate of formation or operating agreement may be required to see, who the owners are of the business, and who, what their roles and responsibilities are. There also might be a requirement to see, lease documents if you're renting a property or renting a space, what your lease terms are. So what, how long the lease is, what your monthly payment is there any renewal options that the tenant might have, just to give us a sense of how long you might be able to occupy the space. And then, other things, right? Contracts or franchise agreements. If you're looking to open a franchise business, making sure that the franchise agreement outlines any sort of royalties or fees that need to be paid. Not as common, but it does come up. And then, here's just some general best practices that are outlined as far as what you should also consider when you're looking at business financing and talking to a bank. So, know your numbers. What does that mean? It means if you're coming to a bank and you're requesting a certain loan amount, understand what that might look like from a repayment perspective. And does your business have the ability to justify that? If you're running a business and say it's doing $100,000 or $200,000 in sales, and you want to get a $250,000 loan, is that doable? And if it is, how can you prove it? Do you have projections that outline that you're going to be able to repay that over 5 years? So trying to also come to the bank and be prepared where also if you're showing, if you're in the early stages of your business and you are showing a loss, why is that? Maybe point to some expense items that were larger up front that incurred the loss, but then, will no longer be going on in the future. If you're looking to buy real estate and say you're leasing a property today, try and show the bank, okay, I'm currently paying, $3,000 a month on a lease. And when I buy this building, I'm expecting my mortgage will probably be comparable or less than that. And then, being able to talk through some of those details. Know your options. So, have a conversation with the bank or any of your trusted advisors, your CPA, your attorney, to know what lending options you may have. Depending on what your situation is, you may have a few different options, or you may have one or two. If you're looking at permanent working capital, do you want to look at, or working capital in general, do you want to look at getting a term loan? Do you want to maybe ask for a line of credit? If you want to ask for a line of credit, one of the bank best practices that we have is that a line of credit amount might be 10% of annual sales from the year prior. So if you do $500,000 in sales, a $50,000 line of credit could be a permissible amount. So, is that something you maybe want to go to the bank and request or look at as an option? And then, we also advocate that you're transparent with us. So if you have, obviously, good, bad, and ugly. If you got great things about your business or great things about your personal experience that you want to share, highlight that. If you have anything that's bad, losses, any credit issues, any external factors that are worth mentioning, share that with the bank. Oftentimes we find that, the borrowers that work with us that are transparent, that provide information in a timely manner, have a much higher success of getting financing versus ones who don't disclose certain items to us, or we have to submit the request and excuse me, then we're surprised on the credit report when we see, they have a lower credit score than maybe they indicated pre-application. So it's always better to be transparent, and we often strive to do the same. Jen's been on calls where we've been able to communicate with borrowers when we can do something and when we can't. If someone wants to borrow a certain amount, and based on our analysis, it's not going to fit within our wheelhouse, or we don't necessarily think we can get it done at the same amount that they're looking for, we tell them, and we tell them why. So it's, and one of the things that I always like to highlight is that, you know, the bank should be, the banker and the bank client are really on the same page and really have the same goal. You know, we're driven to try and expend capital and grow our portfolio, and business owners are typically trying to procure that capital. So we're on the same team. And if the bank comes to you and says, hey, they can't do the loan, it's not because they don't want to necessarily, because we're all often motivated or reaching to try and grow by lending more money. It's that we see factors in the request that may be a path to, or have a barrier to getting approval. And, that's where we try to share feedback that, if we're looking at a certain collateral item, or if there's a credit issue, we'll tell you, because the last thing we want to do is waste your time and ours to ultimately get a decline. So, be transparent. We strive to do the same with our clients, and, ultimately help, offer that capital or help provide financing that can help businesses grow to the next level. Jen, I think that's the summary of the presentation. I see there's a couple questions, but I'll if there's anything that you think I might have missed, feel free to jump in, or we can jump right into the questions.
I can't think of anything you missed, so yeah, we can jump right into the questions. And if you have any additional questions, please feel free to either put them in the Q&A and the chat. We'll be checking both.
Awesome. Yeah. So one of the questions I see here is, what if you have an LLC but have not filed taxes yet? Am I able to get financing? So if you had formed your LLC, say in 2024, obviously we understand that, you haven't had the pleasure of doing a business tax return yet. So, it would not be a disqualifier. You would be able to look at getting financing if you prepare some of those items that I mentioned earlier on. So maybe any interims that show existing performance. So let's just say you formed your LLC in February and you've been in business for 6 months, then, having a year-to-date profit and loss on balance sheet to show how you've done so far could be helpful. And then similarly, the projection in the business plan would be required then, because we wouldn't have enough history on the business to dictate, what the request looks like and if the business can repay it. So what does the business plan outline? And then what do the projections show? What are some good benchmarks for a startup when it comes to net income in year 1, 2, and 3? Yeah, it's a good question. It's totally industry specific, right? I mean, if I was to tell you should be running at a 10% margin, that could be very doable in one industry, but very challenging in another. So, it just depends on what business type you have. My thought or my advice is you can probably look up some industry data for your specific industry and see, what are profit margins that are expected as an industry average, and then are you below or above that, and why? Obviously there's also understandable nature that for a business, it does take some time to gain or stabilize to profitability. So depending on what business type that is, you might have a longer runway than another. But from a bank's perspective, we want to know, if we're lending money, are you going to be, is that going to help enable or drive profitability? Because ultimately that's what's going to help repay the loan. And a similar question just rolled in: is it okay to have a net loss in year 1? Is it okay? Yes, if it can be explained. And that obviously can be for a variety of factors: timing, investment that's required to start a business. That's more than understandable that you may have a first year that shows the loss, but then, can you show projections or, in year 2 or 3, evidence that you are stabilized or going to profitability? What if you open an LLC but never put in the work to have filed taxes? What can you do to fix that and get funding? So some clients I know will set up an LLC, and if it does no business activity or is dormant, then, there are no taxes to file. The bank is going to look at a couple of things. If you have an LLC in place, is it in good standing? And if there's been any historical performance of the business, but there have not been taxes filed, they would, you would need to talk to your CPA or a tax accountant to see if you need to start a filing retroactively. I could share with you one thing that's important is that sometimes we run into a situation where a business tax return and an internal financial statement look different. And there's obviously a variety of factors of why that could be, but the bank is going to leverage the tax return with the greatest weight. So because it's a filed document and it's what we state review as our kind of our main source of indication of whether or not a business is profitable and or can qualify for financing. Obviously, we always advise our clients to work closely with the CPA, and we can provide recommendations for ones that we work closely with, or I'm sure the SBDC also has recommendations for folks that small business owners can work with. All right. From another question, if you own income-based real estate, can that be used as collateral? So good question. If you have real estate that is investment in nature, or you have tenants, or if you have tenants or other folks that are helping pay rent for the building, we can certainly look at that. There's two avenues in what that comes up. There's if you're looking at, say you're operating a true like for-profit business or business that has a certain purpose, and you are looking to borrow, and you own a property that's a rental property, free and clear with no mortgages, and it's available to be used as collateral, the bank certainly may look to do that. If you're looking at more of a mortgage tied to an investment property, that's looked at a little bit differently. So it would be, the bank understanding what the rent roll of the property looks like, and what the expenses are, and then how much net operating income is left over to help support a mortgage. So there are times where we will see a client has a manufacturing business, but also has some rental properties on the side, and those properties could be valuable collateral for future financing. Certainly could be an option. And I see here there's recommendations. I presume that's about the CPA. We certainly can follow up, or can I have you connect with the SBDC for some of those preferred providers? And it just depends on what your industry or geography is. We have CPAs that work in Philly and South Jersey and Pennsylvania suburbs, and then some that work specifically with certain industry types. Average timeline for an application to receive funds. So how long until you get your money, right? It's a good question, and it can vary. If it's a request that's as simple as maybe just setting up a working capital line, and it's an existing business, it can be a couple weeks to a month. It can be very quick. If it's something more complicated, or if there's an SBA guarantee that needs to be obtained, or if there's real estate involved, that's where the timeline can be pushed out a little bit. I can tell you that M&T is pretty quick in terms of we review our applications and credit requests on the front end before really submitting anything. So Jen and I are able to give clients a pretty good understanding of what we expect the bank to approve or decline, or what terms we can offer. And then, from there, from an approval, it's just a matter of how quickly the due diligence and loan closing process can be done. So sometimes that's waiting on the bank. Sometimes it's waiting on due diligence providers for an appraisal or other things. And sometimes it's waiting on the client if they're very busy and they don't deliver documents in a timely fashion. So it just kind of depends. I would say, anywhere from 30 to 90 days is probably a decent range, but obviously we can be more specific when we know the nature of a specific request. Okay. And if you're in the food industry in Philly, I'm sure we can find a CPA recommendation for you. Thank you for clarifying. One other piece of feedback or advice that we recommend, and we've covered before in other sessions like this, is if you are an existing business owner and you have a business banking relationship, we always ask who your banker is and do you know who they are that you can reach out to them. So, in the example of how Jen and I work, you've got 2 points of contact. You got a business banking relationship manager, who's myself, and a branch manager who's Jen. Work closely in tandem. And so when we work with our clients, they know that they've got both of us that they can reach out to should there be any questions or any needs that arise. So if you bank at, say, Chase, do you know your branch manager or do you know a local contact that can be of assistance or answer these questions for you? If the answer is no, I would consider reaching out to that bank and seeing if you could find out who it is. And if the answer is yes, how easy are they to reach out to, or do they provide timely feedback and help you in answering some of these questions? I think we always say there's kind of four-pronged trusted advisors, a banker, an attorney, a CPA, and then an insurance provider. It's always good to kind of have those folks as names versus companies. So, if you have your insurance at Allstate, who is your Allstate agent? If you have an attorney at a certain firm, can you call them directly? Like, those things are always helpful. Depending on the life cycle of your business and what's important, some of those may weigh more important than others, but I think it's always something we highlight as, knowing an individual at the institution is always good. Pause
Right.
to see if any other questions.
If you have any questions, remaining questions, please feel free to submit them. I did post a quick survey that is required by our funders that we can continue to provide no-cost webinars like the one we provided today. If you do have any remaining questions that you may think of post-webinar, please feel free to contact us via email sbdc@temple.edu, and we were happy to answer anything that you may have. Again, this information session will also be recorded, and the recording will be provided via email, and the follow-up email within 2 to 3 business days, we will send the slide deck as well as a recording. Thank you everyone for joining us today for Intro to Business Lending. Thank you, Steve and Jen, for presenting today. I hope the information was very informative to everyone. Again, if you have any questions, please feel free to reach out. Enjoy the rest of your afternoon.
Thank you.